have to admit that I think that Trump is right about the blue-collar consumer. I think they are showing up, and they are showing up in a different way. If you look at truck sales or RV sales or boat sales, which is a world that I'm familiar with, they're clearly showing up and spending money. I don't know if it speaks to the overall health of the economy, but I think at least...
Why do they feel confident enough to come to one of your stores and plunk down or lease one of your big RVs, or not so big RVs?
Well, it isn't just the RVs that are being sold, right? You look at truck sales in America, and we had good auto sales in 2019, and starting off 20 pretty well. I think the American consumer is convinced because they're also being told that the economy is good. And so I don't know that that blue-collar consumer necessarily has the same indexes that all of us have. Their 401k looks a little different. They're dabbling in the stock market, not as much. They don't necessarily have the same assessment of whether their house is worth more or less. But they're being told that the market is good, and they're being told that the economy is good.
But blue-collar wage growth has been better. It has picked up after languishing for years. And in fact, blue-collar wage growth is outpacing white-collar wage growth right now. Except you see this divergence where manufacturing blue-collar jobs are. Even though there's 500,000 manufacturing jobs open, that it is lagging blue-collar wage growth overall. Why? Why aren't we seeing more movement?
Well, I worry about the manufacturing jobs and that separation between there and the pay in that area, because that tells us a lot about where the economy is going. So if you're a Fortune 500 or Fortune 1000 company today and you're planning out your capital expenditures for the next couple of years, machinery, equipment, things of that nature, if that isn't a very robust part of our economy, I worry about what that tells us. The canary is telling us about the coal mine that's coming.
What about the debt levels of people who are coming in and well, I don't know what that is. We'll find out. What about the debt levels that you're seeing? Are they manageable? Do they have too much debt? And what about businesses as you look at their debt levels?
So there's two specific issues. One, on the personal side, I get the chance to see a lot of credit profiles from blue-collar consumers all over America. And we're seeing them have less credit card debt than they had a couple of years ago. Their FICO scores are up, and their credit is actually, the amount of debt that they have out there is actually down. So that has actually surprised me. In terms of business debt, it's a little tough because you're talking about big business debt, right, has bonds and a number of other big indentures. Some of those are going to start to mature. On the small business side, it's still hard to get money. It's still hard.
We cover markets every day here, and we look at how the stock market is doing as an indication of how our overall economy is doing. Do you think that that's fair? Is it a good indication of where we're going? Are the markets right, that we've got more room to run?
Well, I think we have more room to run, but I don't know that most Americans look at the stock market as the tipping point for them. I don't know if that's the barometer. If you visit, a small rural town in America, which we'll cover in a little bit, I don't know that they're paying attention to the stock market. They're looking at what are the jobs that are available in their community and how are businesses doing in their community. And I think they're doing okay. And from my perspective, last year was a tough year. This year looks like a lot rosier of a year.